Good morning. We are from Group 5 Financial Market and Institutions, Group C. Today, we are here to share about driving the future, the digital banking landscape in Malaysia, and the fintech revolutions. So, here are the members of our group.
Hello and welcome. Today we'll explore how fintech, a global phenomenon, is revolutionizing finance through innovative technology. This transformation significantly impacts banking system worldwide with Malaysian bank under close watch. Firstly, the fintech is transforming traditional business method and identifying competition among digital platforms. Big tech companies like Google leverage big data, cybersecurity, and cloud services to capitalize on this trend. Secondly, digital wallets are becoming essential in financial markets, pressuring traditional banks to adapt swiftly. Thirdly, the fintech revolution challenges the traditional banking sector, leading to increased acquisition and partnership with fintech startups. These strategies help banks to stay relevant by embracing technology innovation. And fourthly, Malaysia, with its dynamic financial sector, has become a key base for exploring fintech and traditional banking integration. This has major implication for Malaysian banks as they face heightened competition and technological disruption. Fifthly, digitalization and fintech innovation significantly influence Malaysian bank strategies and operation, pushing them to remain competitive in a digital world. So, our study examines fintech's impact on various financial markets and segments in Malaysia. We aim to identify growth opportunity for traditional bank and tech companies in this technology driven era.
Hi and Assalamualaikum. My name is Nur Ain Umairah binti Muhammad Azam and I'm going to present about the literature review. For the first article, digital bank or virtual bank is the institution that provides similar services as the traditional banking, except it is wholly based on the internet and doesn't require any physical branch that usually costs a lot of time and money for the purpose of renting. Even though the virtual bank is so cost efficient in terms of money and energy, it also can create obstacles as it relies too much on the technology that might affect the virtual services if there are interruptions in the system. The second article analyzes 5 variables that affect the Malaysian consumers' desires to utilize digital banking. The first one, perceived usefulness, indicates how the users can be influenced towards the application of digital banking, whether it could improve their experience in banking or not. While for perceived ease of use, it focuses on the simpleness in using virtual banking service that doesn't cost any extra work or effort to do. Along with that, the perceived trust tells us about the user's confidence in adapting to the security, privacy, and dependability of the new development. If these 3 variables show such a positive impact to the users, then they will be more likely attracted to the idea of developing digital banking. Finally, the peers influence explains on how someone that has the opinions that you value the most influence yourself in making decisions about adapting to the new services. The article noted that besides software and mobile application, fintech is also recognized as the technology specially made for the purpose for improving the efficiency for service providers such as PayPal to give and bring out the best services to consumers. However, the measurement of how successful fintech is growing is fully determined by the feedback of consumers, whether they are pleased with the services provided or otherwise. Diagram 1 visualizes the increment of e-payment users in Malaysia from 2017 to 2021, which explains that the users are adapting to digital banking and ready to face any advancement of financial services in the future. To be specific, the growth of the numbers in instant transfer, internet banking, mobile banking, and mobile payment indicate how the digital transformation will affect the rapid growth of fintech industry in Malaysia. For article, examine the hurdles faced by the industry in developing the fintech sector. There are 7 challenges mentioned in this finding, which are The difficulties in surviving as the sector that is quite competitive, the limitations of the financial technology, such as the weak internet connection, barriers of the legislation as such products of fintech are still regarded as new, hence there was no specific rules to the customs fintech companies, insufficient funding due to high-risk investment since it is a startup companies, lack of qualification that demand for digital abilities that lead to lack of skilled workers, undue influence and trade-offs between innovators and Securities Commission, and lastly the cybersecurity threats that lead to fraudulent activities, for instance, the exposure of users' privacy data and also identity fraud. The last article is about the application of fintech or internet-based technology that is stressed in creating new implementation, plans, cycle and outputs in the market, results in advancement model in the financial industry. The advancement may lead to the increment efficiency in the management's operational costs. Fintech also create information technologies and open a new path for potential investors. From here, we can see that fintech has been targeted as the way out for the companies to gain access to the financial services for extra funding, such as the capital requirement and the main key for promoting economic growth.
I would like to share about main issue of the digital banking landscape in Malaysia and the fintech revolution. Let's begin by addressing a critical aspect of digital banking, cybersecurity and data security. As more individuals embrace digital banking, so ensuring the safety of their personal and financial information become paramount. According to recent research, cybersecurity is identified as a significant concern by 18% of banks and 19% of fintech companies in Malaysia. In the realm of digital banking, user data is stored on server, making it a prime target of cyber criminals. The risk of cybercrime, including tactics like phishing and malware attack, poses considerable risk to both user and financial institutions. Phishing scheme where criminals impersonate legitimate entities to deceive individuals into divulging sensitive information can lead to the compromise of banking details. Additionally, malware such as virus and ransomware pose threat by infecting device and compromising data integrity. Moving on to the readiness of customers to embrace digital financial service, we encountered a multifaceted landscape where Malaysia and exhibit promising digital development trends. Significant difference exists between urban and rural areas. Urban centers enjoy robust digital infrastructure, whereas rural regions face challenges in connectivity and adoption. The digital divide between urban and rural areas underscores the importance of target outreach and education initiatives. In rural communities, traditional banking remains prevalent due to familiarity and perceived security. However, promoting the benefit and safety measure of digital banking can bridge the gap and empower individuals to embrace digital financial service.
My name is Kaminjan. I will present the main issue for regulation uncertainty and unemployment increase. First, regulation uncertainty. As digital banking is announced to the public, the policy and regulation are the important tool to control the transformation activity, service, privacy of customer and other. The management of digital banking and fintech should understand the law and regulation to ensure activity of banking or transaction obey the law that is established by the government. The problem of regulation uncertainty on data management and analytics may cause the illegal activity and the risk of leak information. Privacy of the customer increase. The regulation uncertainty of service and system will cause the risk of system down and hacked by others is high. With the increasing number of customers in digital transactions, new rules and standards should always be supervised with current problems to protect the information of customers. Besides that, the regulation uncertainty on server and blockchain causing virus to be implemented into the system without any awareness or with warning. It will decrease the trust of customers because the security and privacy of customers is not granted, safe and protected. After that, the list of investigation and supervised by the Bank Negara Malaysia will derivative the problem of illegal digital banking involved in market and increase the cybercrime issue. The lack regulation of policy and rule between the technology and finance, like AI, broadcast transformation activity, and other not fully comprehensive to control all digital banking and fintech process. For the unemployment increase, the digital bank will replace the commercial bank and traditional bank. The worker in the branch of the bank will affected by the issue. When fintech is developing at a rapid speed, the process of digital banking replacing the traditional bank become comprehensive. The decay of traditional bank and branch of bank will cause the unemployment rate increase because the management will more focus on maintenance costs of the system and the AI will complete the work of humans with more accurate and faster. The employer only they have knowledge on technology and professional skill of finance will look risk to face the unemployment problem. When the digital bank can fully replace the traditional bank, the face-to-face to solve the problem does not exist and all the service will provided by the AI and only need some expert worker to maintain the service and update the bank system. The AI responsibility will increase all the analyze, transformation problem, credit approve, and other. Because of that, the traditional bank margin revenue will drop when digital bank and fintech are full active.
Good morning, Doctor. I'm Xuan Wen. I would like to share with you the significant advantage that the development of fintech brings to digital banking in Malaysia. Firstly, let's talk about accessibility. One of the greatest challenges faced by traditional banking has been geographic limitation. In Malaysia, there are areas without physical bank branches, leaving many without access to essential financial services. However, fintech has overcome this limitation, providing mobile banking apps and online platforms that allow financial transactions from any location with internet access. Digital banking services offer with 24 hours a day and 7 days a week, and it is particularly beneficial for those needing assistance outside normal banking hours. Besides that, fintech enable banks to customize services to meet the diverse customer needs, with the features such as language option, intelligent interface, and personalized financial management tools, making banking services more accessible to everyone. Next, let's consider costing reduction. Fintech streamline banking operation by automating routine tasks such as account management, transaction processing, and customer assistance, reducing the need for human interaction, labor costs, and increasing efficiency. It also cuts infrastructure costs as digital banks rely on the cloud technology instead of expensive physical branches upkeep, including construction, rent, utilities. Moreover, fintech-powered digital banks optimize transaction costs associated with the cash processing and paper-based transaction, as electronic payment become the norm, allowing banks to lower or eliminate fees, making banking more affordable for customers. The third advantage is innovation in product and services. The advancement of the fintech is driving a transformation in traditional banking service. Users can now bypass intermediaries like banks and transfer money directly through the digital platform using peer-to-peer payment. It is not only to lower the transaction costs, but also increase the accessibility. Robotic advisors powered by algorithms provide automated investment suggestions, democratizing investment opportunities and lowering entry barriers for new investors. In addition, AI-enabled customer service tools offer personalized assistance, resolve inquiry, efficiency and promptly, improving the overall banking experience through the efficiency and customization. Lastly, we move to financial inclusion. Fintech promotes financial inclusion by extending banking service to the undeserved population who face the barriers to accessing traditional banking, such as the lack of documentation or physical access to bank branches. Digital banking platforms address this issue by offering basic services via mobile phone or the internet. For example, someone without access to a physical branch can use a smartphone to conduct the transaction like deposits, withdrawal, and transfer. Furthermore, Fintech also support alternative credit scoring methods that are assess creditworthiness based on the alternative data sources such as mobile phone users pattern or digital payment history. This expands access to credit for previously excluded individuals. Fintech also promote micro-saving and microfinance, enable individuals to build up the financial and pursue economic opportunity, contributing to social economic development and inclusive growth in Malaysia. Hence, these advancements are not only transforming the banking sector but also contributing to the overall economic and social development of the country.
My name is Tai Shiqian. As we mentioned before, fintech adoption has benefit for Malaysian digital banking industry, but it also has drawbacks. First is security concern. For example, cyber attacks and disruption by cyber criminals. Fintech platform obtain a great deal of private user data, which may be harmed by weak security controls or flaw in the system. It can increase the risk of cyber attacks. In digital banking, operation and funds can be disruption or stolen through attacks like DDoS or injection of malware. Besides, it poses major threats for theft of user identities and data breaches. Thieves exploit fintech system flaws to steal users' personal data for illegal purposes. Large amounts of private user data, whether financial or personal, are at risk due to weak security control or system flaw. Thus, it is crucial to inform users about safe online behaviors to combat fraud and protect sensitive data. Next, for job displacement. Fintech technologies convergence with digital banking has the potential to reshape the labor market in Malaysia. It is using automating various banking business processes like account management, payment processing, and customer service to increase efficiency and reduce operation costs for financial institutions. However, this may minimize the needs for manual rules in traditional banking. Furthermore, fintech's automation and simplification of banking operations may increase unemployment rates in traditional banking, posing an economic challenge for those depends on this job. Even so, advances in the fintech industry has created new jobs, but it requires specialized skill and expertise for these positions. Again, digital literacy gap prevalent among specific segments of the population. As we know, not all Malaysians have good technology or the internet access, especially in rural areas. And it also has participation barrier, which is limited access to technology inhibits effective fintech participation. Additionally, lack or differences in digital literacy variance, especially among older adults and those with limited technology access, that hinders full use of digital banking. Also, it has challenged at difficulty navigating fintech interfaces and mastering secure online transaction methods. Thus, it is important to closing the digital gap for promoting financial inclusion. Another disadvantage is regulatory challenges. The regulated environment around fintech is marked by both dynamics and complexity, presenting both chances and threats to the participants of Malaysia's industry. Due to dynamic regulatory environment, the changing regulatory framework brings with its unpredictability and compliance burden, which significant compliance costs and admin work required, especially for beginners and creative firms. However, fintech companies must fulfill extensive requirements of regulation, which include KYC, Know Your Customer, and AML, anti-money laundering compliance. Through this compliance and innovation, it's needed to balance experimentation with strict adherence to regulatory guidelines. Yet, adhering to these regulations required may hinder operation flexibility and scalability.
For the policy recommendations, I would like to share about the suggestions of new policies. The first one is the cyber insurance mandate. Digital banking landscape and fintech revolution currently are facing numerous threats from the internet, such as stealing of customer data and hacking. These issues might hinder the growth of digital banking in Malaysia. Under the new policies, Bank Negara Malaysia (BNM) must mandate every authorized digital bank to obtain cyber insurance coverage from licensed insurance company only. It is to minimize the financial losses and liabilities that potentially results from cyber attacks and hacking. Cyber insurance coverage is of utmost importance to protect the digital bank business against the risk in the internet world, which is very uncertain. BNM could limit the minimum insurance coverage for each digital bank based on their risk, skills, and areas. The larger the risk, skill, and popularity of digital bank, the larger the insurance coverage should be purchased. The second one is the Go Green digital banks. Nowadays, sustainability is a familiar issue in every industry, including digital banking. Malaysia is on path to promote the achievement of sustainable development goals in every industry, as Malaysia mandated every listed company to disclose sustainability reports in addition to annual reports in Bursa Malaysia. To align with this, we recommend the Go Green digital banks as a new policy that could be implemented by the BNM. There are a total of 17 sustainable development goals, which include climate actions and life on hands. BNM could require every licensed digital banks to adopt this environmentally sustainable practice, such as paperless transactions and records, efficient energy utilizations, and investment in and support the green project. By doing this, digital banks are considered to contribute to environmental and energy conservation. Also, they are fulfilling social responsibility to ensure a sustainable environment and industry. For those digital banks who are capable of meeting the sustainable development goals, BNM could give more incentive to them so that the practice are maintained and continue to develop. Examples of incentive are low discount rates and higher limits of loans that could be borrowed.
Hi everyone, I'm Chilok and my mentoring number is 294235. Today, I will discuss two crucial ways to improve current policy for the digital banking and fintech revolution in Malaysia. First, let's talk about implementing a dynamic regulatory framework. In Malaysia, we need a flexible, accountable, and transparent regulatory environment that fosters sustainable growth while ensuring market stability and consumer protections. The objective is to promote sustainable growth in the digital banking and fintech sector while enhancing the current environment. This can be achieved through several key initiatives. Firstly, optimizing licensing procedures for fintech firms. This involves streamlining the application processes, reducing unnecessary bureaucratic hurdles, and making it easier for innovative startups to enter the market. Additionally, promoting the use of sample environments is crucial. These control settings allow fintech companies to test new technologies under regulatory supervision, similar to the practices of the Monetary Authority of Singapore (MS) and the Financial Conduct Authority (FCA) in the UK. Sandboxes enable firms to refine their products before a full market launch, ensuring both innovation and safety. Thirdly, establishing clear protocols and guidelines for data privacy is also vital. This means creating comprehensive data protection regulation to ensure that consumer data is handled with utmost care, thereby building consumer trust through transparent data practices. Additionally, the framework must be transparent. Clear and transparent regulation help to foster trust and loyalty among consumers and market users. Transparency ensures that all stakeholders, including financial institutions and fintech companies, clearly understand the rules, processes, requirements, and expectations. This clarity encourages compliance and innovation within set parameters. Next, we need to promote digital banking in rural areas to ensure the benefits of the digital banking and fintech revolution are accessible to all Malaysians, not just those in urban areas. Currently, digital banking initiatives are concentrated in city areas, creating a disparity between urban and rural populations. So, our objective is to extend the focus of the current policy to include the development of digital banking in rural areas. To achieve holistic economic success, it's essential to focus on the development of digital banking in rural regions through several strategic actions. Launching campaigns to introduce and exploit digital banking is a critical first step. Bank Negara Malaysia (BNM) can lead these campaigns by organizing workshops and seminars in rural areas to educate residents about the benefits and uses of digital banking. Collaborating with local community leaders can help spread awareness and gain trust. Secondly, advertising the benefits and importance of digital banking through signboards posters, and local media is also important. Leveraging telecommunications to broadcast information about digital banking can highlight how it can simplify financial transactions and provide better access to financial services. Thirdly, providing incentives for rural residents to adopt digital banking is another effective strategy. Offering bonuses or discounts for transactions made through digital platforms, partnering with local businesses to encourage digital payment options, and providing initial setup assistance and technical support to new users can significantly boost adoption rates. However, for digital banking to be successful, strong and stable internet connectivity is crucial. Many rural areas face challenges with internet access, which hinder the adoption and smooth functioning of digital banking services. Therefore, it's essential for the government to address these connectivity issues by investing in infrastructure to improve internet access in rural regions. In conclusion, by adopting a dynamic regulatory framework that is flexible, adaptable, and transparent, and by focusing on promoting digital banking in rural areas, Malaysia can create a conducive environment for the growth of digital banking and fintech. Thank you.
Hello again. Let's wrap up by looking at how fintech is changing digital banking in Malaysia and transforming the financial sector. Fintech is changing how businesses operate globally with the new technology. This change is very important for Malaysian bank as they develop digital platform and compete with big tech companies using customer data. Traditional banks now see digital wallets as essential alternative, forcing them to adapt quickly. This fintech revolution is changing the banking sector, leading to more partnership and takeovers with the fintech startups. Malaysia has become a key hub for fintech, with the major developments making it a leading center for banking and fintech services. Furthermore, in Malaysia, digital banking is growing fast, with a big increase in online payments thanks to widespread smartphones use and internet access. This has led to new fintech services like digital wallets and banking apps. Moreover, the increase in digital transaction brings security challenges, raising the risk of cybercrime and data breaks. The shift to fintech might lead to the job losses in traditional banking due to automation, but it also creates jobs in areas like software development, data analysis. So, thank you for the attention. We hope this study provides useful insight into the opportunities and challenges fintech brings to Malaysian financial markets.
Here's the end of our video. Thank you. Terima kasih. 谢谢你. Nandri.